Hey everyone, Adrian here. Welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach FIRE as soon as possible. So one of my most popular, I would say the most popular video that gets the most views every time or almost every time is my monthly portfolio unveil video. So in this video series, I unveil my entire portfolio to the whole world from A to Z, right? I go over my accounts. I show my entire portfolio, what I bought, what I sold, any changes I made, and I go do an overview of the funds that I have, et cetera, et cetera. So since this is one of my most watched videos and where I get a lot of questions and I keep getting the questions, I decided to make a video specifically to explain or to really answer some of these frequently asked questions I get during my portfolio unveil video. So in this video, I'm going to do a deep dive into the actual portfolio. So I'm gonna basically separate it in four sections. First, I'm gonna talk about the structure of my portfolio. Number two, tracking, exactly what I track every single month. Number three, my strategy when it comes to the different accounts. And last but definitely not least, number four is going to be taxes. So I'll talk to you about taxes. So hopefully by the end of this video, it should answer any questions that you have and I don't cover in my monthly portfolio videos, because I really want to keep that video specifically towards, the holdings, any changes that I made, etc. I don't talk usually about, the structure. So I'm going to take care of that in this video. So hopefully by the end of this video, you will really understand completely from A to Z my monthly portfolio unveil videos. Let's get started. All right, everyone, let's start with structure. Structure first. This is going to be the easiest to explain. So basically, when I start every portfolio unveil video, this is what I show. This is Passive, a nice, neat little tool which basically consolidates multiple accounts together. So this is a combination of all my accounts and all my wife's accounts together. So in terms of structure, I basically like to look at it as I have two entities. So total, I have 6 accounts. I have my Lira, my RSP, my wife's RSP, my TFSA, my wife's TFSA, and our joint cash account. So the retirement account is entity number 1, which has the Lira and the 2 RSPs, of course. So why is it separate? Well, because I'm not extracting any of the income. It's just accumulating, and I'll show you that in a second, of course. So that's entity number 1. Entity number 2 is the main portfolio, which has our 2 TFSAs and joint cash account. This is what, I extract the income from this every month. So those are the 2 entities. They have 3 accounts in each. But when you click on the dashboard, this gives you the total, right? So the total value in Canadian dollars. So whenever you see my thumbnail here every single month, you see this 946,900 portfolio. That is the value, and I basically just take this number. That's all it is. Whatever it is, the day I'm filming the portfolio video, that is going to be the number you see. For the passive income, that's just a combination of all my passive income, but I'll show you that in a second, a little later. So that is basically in terms of structure, guys. The way I see it, I have 2 entities, my retirement accounts and my main portfolio, and that's exactly why I have it separated in the Excel sheet, which is what I show you after the passive overview, right? This is the RSPs tab here, which is the 3 retirement accounts, my RSP, Erica's RSP, my Lira. So my Lira, which is very small, and Erica's RSP is completely on drip. So this is just compounding away. I don't really manage or do anything. And then you have my RSP where there is no drip, but I just manually reinvest it every single month. I call it the manual drip, basically. So that's pretty much it in terms of structure. The main portfolio here is just like passive says here is, the 2 TFSAs and the 2 cash accounts together. And these book prices are, the real book prices across all 3 accounts. So for example, let's say I have FTN or DFN in multiple accounts. Let's say I have some in my TFSA, Erica's TFSA, and the cash account. This book price basically combines all the shares and the average price. So this is, I track it manually basically. Because I do have some funds that are in multiple accounts, and this is why I'm showing it to you in Excel every time, so you could actually see the real book prices. So that's pretty much it in terms of structure. Again, 2 separate entities, the main portfolio, which is our 2 TFSAs and cash account, joint cash account, and the RRSPs, or the retirement accounts rather, which is R2 RRSPs and my Lira. Moving on to tracking. So that was structure. Moving on to tracking, let's start with the retirement account. So it's fairly easy to track accounts where you're not pulling any money out, right? Because all you really need to know is how much money you put in and what's the value of the account. So that's exactly why at the top here, for every one of these accounts, that's basically the only thing I track. How much have I put in my RRSP throughout all the years, and how much is it worth now? That's basically all you need to track, right? And then you have your return. And of course I put unrealized because it's an unrealized total return, right? So I do this for all three accounts. And just remember, we've been contributing to RSPs since like 18 years old, but we've been only managing them, as do-it-yourself investors, pretty much in 2020 or 2021. I can't remember when we transitioned it. Before, we were just with a financial advisor in mutual funds with Great-West Life. So I'm sure if we were managing our own accounts since the beginning, would it be a lot more than this, or much higher return. So when it comes to tracking for, let's do Erica's RSP and my Lira, simply because it's on drip, I don't really track or care really to track the average cost base or the book price like I do for mine, because it would be very complicated and hard to track it, and annoying to update it. So the only thing I really track is how many shares do I have of each fund, what is the annual dividend rate. And of course, some annual dividend rates, and you could see that here, they change or they vary. So you have to check the comments if you want. And of course, I'm reminding you, don't forget that you could always download these Excel sheets here. Every single month I update them. You could just download them here yourself. So each one is different. So for example, QYLD, RYLD, the monthly dividend varies. This is just an estimate. I do. I eyeball it basically. The one set in stone will have nothing. Then you have some teal blue here, where like RIV and CLM, these are ones or funds that reset their dividends annually. So I basically track it. They get reset once a year. The light blue, again, these are just the estimates, because it's very hard to accurately predict the annual dividends, because they change every month. So these are just estimates. And then you have the darker blue ones, where on my the silver, the oil, and the ether, as well as the Bitcoin, this is where the distributions could vary greatly. So what I decided to do with these ones specifically is just take the average based on the last three dividends. So it's very easy to do. You tally up the last three dividends and you multiplied by 4. That gives you the basically your average annual dividend rate based on the last three distributions. So these could change month to month. Another thing is very important to track, since most of these are all US except BTCY. Everything else in these two accounts is all US currency, right? And because I track everything in Canadian dollars, I need to track the exchange rate, right? So all these amounts here, the monthly income, it's all in USD for these two accounts. For this one here, it's because it's BTCY, it's listed on the Canadian stock market, it's Canadian. So this is why I have a separate tab here for that one. But basically, I take this number here and multiply it by the exchange rate to get the correct, or the total, in Canadian dollars. So that's very important to understand, that I track everything in Canadian dollars. So the income will increase if the Canadian dollar starts going down compared to the US dollar. So that's what actually helped me in the last couple of months to have a nice big increase in dividend here. So that's basically what I track for the retirement accounts. It's very, very simple. I don't want to break my head. I do a little bit more tracking on mine because there's no drip. So here I really do track my book prices, so you could see the yield for each one, the total yield on my account, whereas my Lira and Erica's RSP, I don't track it, but Erica's RSP is probably going to be around yielding about 12. Will always be about 12 or a little over 12% yield. Mine, which I'll discuss in a while when it comes to goals. is a little bit higher because this is really my YOLO account. So that's it for the retirement accounts. That's what I track. For the main portfolio, it's pretty much the same. You have the name of the fund here, the symbol, the sector, the fund composition. I like to go in detail, especially with these all-in-ones. Total invested, this is just my number of shares multiplied by my book price, the weight, how much does it represent in my portfolio total, book price, of course, my yield for each one, annual dividend, same kind of thing. For some, I do a little bit more tracking like the RSP. So if it's green here, you'll see that basically I'm saying that the dividend did increase. If it's white, nothing happened, or it's kind of set in stone. Again, the crypto ones, these are just based, or their average is based on the last 3 distributions. For the split funds, I do a lot more tracking, okay, for all the split funds here. What I like to track is when did this fund's first dividend come out? So just to give me an idea when the inception date is, how many distributions or dividends has it missed since the beginning or since the whatever date there is there. And if I missed any distribution. So if I missed any distributions whatsoever on any of my split funds, you'll see it in orange. If I did not, it's green. So for example, SPC, they did miss 4 dividends back in 2008, but I personally never missed any dividends since investing in it. That's why it's green. So that's what I basically track, as well as other things, if there's bonus dividend like SPC did, or a reverse split like FTN did, I put it in here. So that's what I track in the annual dividend column. It's a pretty important column, right? Because this is where your yield and how much money you're making basically comes from. It's this divided, multiplied by your number of shares. Basically, will give you the annual income. So that's exactly what the annual income is, right? Number of shares multiplied by the annual dividend rate. And then the monthly income is simply the annual divided by 12. So you have your totals here, everyone. This is what I track. Basically, so 57.86 is my monthly passive income. You see that here. My overall dividend yield is basically how much, this is based not on the share price now, but based on my book price. Okay, very important. This is my yield, not the current yield of the funds. So it's basically my book price, or my total book price, which is 649,000 in this unveil here, divided by what is it here? Divided by the total annual income. That's it. So it's it's the total annual income. It's the opposite. The total annual income. So it's 69,439 divided by my total money invested or book cost. That's what gives you my yield, which is just under 10.7% here annually. So that's basically what I track. This is the book cost, like I said, portfolio value. So what is this number, portfolio value? Well, this is simply the value of the 3 accounts combined. So what I do is I just go in passive. I click on main portfolio, which will give me this guy, this guy, and this guy together. You'll see a total value. So I just take this number here and plug it into the Excel right here. That's all it is. Now you see portfolio value plus total profit. What is this? Well, total profit is basically my realized income that I've received since the beginning. So since the beginning, I received over $200,000 in dividends or passive income. And I also made capital gains by selling, by streamlining my portfolio. I had to sell a lot for my Panama move, so I made a lot of capital gains there. Luckily, I sold before the crash in 2022. So these are all realized, and that's why I put realized. So you have the total profit is basically all my income that I've received and total capital gains. Now you might be wondering, how do you track that? Well, check this out, guys. If you unhide, there's hidden columns here. If you unhide them, basically every single year starting in 2012, I track my realized capital gains. That's why it says realized here, and my passive income. So throughout the years, I've been tracking it. And as you could see, obviously it really jumped in 2020 when I sold my condo and invested it all. And you could see the big jump here throughout the year. So what I track is the capital gains for the year, realized capital gains, and all the passive income that I make, all the dividends I receive. And this is just the dividends from the main portfolio, right? Nothing to do with the RSP. So if you actually put total income received here, it's basically all the income from all the years. That's all it is. It's just an addition of all the passive income I received, and the total profit is going to be all the boxes of the capital gains. So that's basically what I do. So that's really what I track. I track on an annual basis my capital gains, which I expect throughout the years will eventually go to zero, because I'm a buy and hold investor. I'm not really planning on selling much, but it's possible there might be some capital gains going forward. But it's really that's the magic or the key, right, to my strategy. It's the income. So that's really what I track. And on an annual basis, I usually update it once every 3 months or something like that. And that will update these numbers here, which will then update this number here, my portfolio value plus total profit. So the real thing you should be looking at is not this number here, which is the value. It's, how much did I invest and what's the actual portfolio value now plus all the profits. So as long as this number is much bigger than this number, I'm good. I'm ahead, etc. So that is basically it for tracking. I'm just thinking if I missed anything. So yeah, these two columns are always hidden because I don't want to bore you with that every time. But if you unhide them, you could see it yourself when you download the package. So hopefully this really gives you a good idea of basically what I track on a month-to-month basis to come out with these totals and these numbers. So the next thing I want to talk to you about is really the strategy. So let's start with the RSP. So my strategy for these is quite simple. Just grow my wealth using the income strategy as much as I can before I turn 55. So I don't know when I'm going to be turning these in riffs and start to take out the income. I'm not really sure, but basically Erica's RSP here, I wanted to keep it simple. I wanted to keep it classic. So I have more of the regular conservative, covered call mainstream stuff like QYLD, RYLD, and HYLD. Eventually I might even swap QYLD and RYLD into HYLD, right? Because they're already in there. So I want to keep this one as simple as possible, keep it on drip, and just let it compound away. My lira is just, I decided to have fun with it. This is just a leftover from my Air Canada pension. It was only 33K, which half of it was given to me by Air Canada, right, for matching. So I just put it all in BTCY. I said, wait, what the hell? But my RSP here, this is really my YOLO fun account where, and this goes for everything. I decided to pretty much keep everything in US currency in my RSPs because for the simple fact that the main portfolio will be all in Canadian currency and there's no 15% withholding tax, right? So once a month, I'll buy something new here in my, my RSP, and I show you guys everything with the tracker as well as the main portfolio, right? That the tracking. So even here, guys, by the way, you see 2022. If you actually want to see everything I've done in 2021, you could unhide. And you could see the 2021 moves that I made. I started tracking this in January of 2021 for the main portfolio. For the RSP, I only started in May 2022. But so when it comes to strategy, it's really just to get the biggest yield I can with my account. This is my YOLO account, so I'm going to have the more higher yield, leverage, crazy stuff. Like CLM, SVOL, CEFD. I got some ETNs in here. So this is basically my YOLO account that I like to have fun with, that I like to pick and choose what I invest in every month. I find what's undervalued. And my wife's account is kind of like a hedge, just in case, I don't know, I really mess this up long term. But that's basically the objective of the RSPs, is just to continue compounding, because everything is staying within, right? Whether it's drip or no drip. So I'm quite happy. I'm making almost $6,000 Canadian right now between these three accounts, and it's just going to keep compounding and being reinvested. When it comes to the strategy, to the main portfolio, this is what I live off of. This is what I extract every single month. So obviously I want to my objective is obviously to have as much yield as possible, but to also stay responsible. So because of the new all-in-ones that have just come out recently, this is pretty much going forward, I believe, where most of my weight is going to be, most of my portfolio is going to be. So these four here, and I would even put EIT in that category of, my big five or my big five foundation players right now, or funds. Hopefully there's more all-in-ones that come out. Another little objective that I have is always to keep crypto near 10%. Doesn't have to be perfect, but I don't want to try to go over, I don't want to go over 10% in crypto. Just, although they have the covered calls, I think this is the safest way to invest in it. I still want to be responsible. And I also want to keep about 10% in real estate. Which I go with RS as my go-to. The rest of 80% is going to be all in stocks, either all in one covered call ETFs, either split funds as well. I do have a lot in split funds right now, but keep in mind, split funds are not made equal. Some of them, I don't have the really high risk ones in terms of missing dividends like FFN. Or DF. I do have some DGS, but you see here it's a smaller percentage. The biggest chunks, are in the safer ones like RS, ENS, GDV, SBC. So my objective, and probably going forward, when will I be adding to my split funds? I will probably be adding, but only when the NAV compared to the market price is attractive, right? So if there's either a discount or the premium is a lot smaller than normal, that's when maybe I'll add to some of my existing split funds. But going forward, the majority is probably going to go to the top 5 here, these 4 plus EIT. Going forward. So that's basically it for objectives. It's to stay responsible. I always want to try to have over 10% yield, and every month just going through and seeing what I feel is a good deal or undervalued. So that's basically the objectives of the 2 accounts. And as far as this number here, so you see this passive income every single month. So it's quite simple, guys. It's basically the passive income from the main portfolio plus the passive income from the retirement accounts combined. So you add this with this number here, and that's basically the passive income number here on the thumbnail. All right, so just want to make sure that's clear. In terms of taxes now, last thing, I'm going to keep this brief. So obviously taxes over here we're not going to talk about because nothing's being extracted. Nothing is taxed here until you take it out of these accounts. And of course it's going to be, if you're Canadian and staying in Canada, whatever you take out of your RSP is going to be taxed according to your marginal tax rate. But for me, because I'm going to become a non-resident when I do start taking them, and if I still am a non-resident of Canada, it's a flat rate tax of 25%. To Canada, that's the flat withholding tax. It's 25%, so that's what it's going to be taxed. Same thing for my main portfolio on the cash account. So don't forget, this is a combination of 2 TFSAs and the cash account. So even when you become a non-resident, anything from your TFSA is not taxed. There's no 25% withholding tax on it, but there is going to be, as far as I could, what I've understood and read, any income generated from the cash account, from the joint cash account, which is this here, this account here, there's going to be a 25% withholding tax, universal withholding tax. So that's basically it. And I'm proud to say that throughout all the years, I get this question a lot: how much tax have I paid throughout all these years? Like in 2021, how much tax did I pay? I made this much in income and this much capital gains. 2019, 2020, I've never ever paid tax on any investment income ever from the cash account. So of course the 2 TFSAs, let's not talk about them, it's all tax free. But what about the cash account? Zero tax. I've never paid taxes. I've always gotten a tax refund every single year in Canada, and that's because of the RRSP contribution, guys. That is the secret not to pay any taxes, is keep contributing to your RSP, because RSP contributions does offset capital gains, income, dividend income, even interest income generated from your cash account. So I've never paid any tax on any investment income, but when I do become a non-resident, everyone, the portion of the income that's coming from the joint cash account will be taxed at a 25% universal tax rate. But that's it, not more than that, 25%, which is a lot lower than your paychecks, right? So this is why I love investing. So hopefully that answers all the questions you might have had regarding my Portfolio Unveil videos. I've gone through the structure the tracking, the objectives, and the taxes. If you have any other questions, please let me know if anything is not clear. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, PASSIVEINCOMEINVESTING.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals. And it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website, on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.